welcome back, traders and investors. We have Michael Hewson on the line, all the way from England. He is the Chief Market Analyst at CMC Markets. I would say how you doing this morning, but I should ask how you doing this afternoon.
That's right. Yeah, I just finished my lunch, Joel, and very nice it was too. Though I did have it at my desk, I wasn't able to go outside and enjoy the warm sunshine.
So you were sitting there for the CPI data, correct?
That is correct. The US CPI data. No surprises there.
Yeah, let's talk about that.
Yeah, absolutely. I think obviously it's at 2.1%, but the core numbers were a little bit weaker than expected. And I think what that does, I think it really keeps the Fed playing hide and seek with the bond markets. There's an expectation that or there's a belief, I think, in the markets that the Fed is understating the inflation risk. I certainly think that there's a possibility that they could be, but I certainly think these numbers sort of support the Fed's view that inflation remains contained and that the prospect of higher rates, I think, remains further out into the future than, say, for example, it does here in the UK.
And the S&P futures are responding in kind to that data, trading up 8.25 points. So seems that despite Janet Yellen's statements and the street's perception that she's going easy on fighting inflation, it seems, at least for now, the numbers are supporting her statements. Wouldn't you agree?
Yeah, absolutely, Joel. I mean, we're looking at 1980 on the S&P at the moment. We're looking at 17,100 on the Dow to open. So, significantly higher on the day. The risk trade is pretty much back in vogue and has been most of today, in fact, not only, in Europe as well as obviously in the US when you guys open in about 25 minutes' time.
Okay, tell us a little bit about your company, CMC Markets.
Yeah, we're a CFD brokerage, contracts for difference. We basically have we enable clients to trade financial markets by use of a financial derivative, trading the price up and down. It's basically on margin, so you only need a very small amount of capital laid down. We used to have a New York office, but we were unfortunately forced to close it down due to basically the cost of doing business in the US, but we do have a business in Toronto in Canada.
And you're doing all spread betting, or are you doing a little bit outright?
Yeah,
all spreads.
Yeah. It's spread betting and CFDs. Obviously, spread betting is only is unique to the UK and Ireland due to tax laws over here. You don't basically pay any capital gains tax on any money that you win, or say win, any money you make on betting on the financial markets. And you can bet on anything. You can bet on gold, crude oil, copper prices, the main indices, or Apple shares, for example. We've got Apple earnings tonight, so if our clients fancy a little fancy a punt on that, they can also do that as well.
Okay, so you guys make the products for people. I mean, you guys are backing the products that people are trading?
That's right. I mean, basically, we create the derivative product. It's a mirror of the underlying asset price.
Oh, okay. And you can do that I see you're doing it in foreign currencies. You could do it something like in Apple. So what do your customers or traders have a penchant for day going into the Apple earnings? What are you making a market in?
I think the market. Well, at the moment, obviously the market's closed, but we're looking for Apple earnings to. I think the expectation for Apple is it's slightly elevated. You may recall that the chief technology officer of Apple said earlier this year that Apple had its best product pipeline in 25 years. Well, that's a fairly bold statement given the fact that Apple shares are trading just below their all-time highs on that adjusted share price basis of $100. So for me, that pipeline had better be really good this evening when they make their statement, because I think there's probably the risk of a little bit of downside in that particular stock.
Right, and we were discussing earlier on the show how they had the 7-for-1 split, they raised the dividend, they increased the stock buyback. I mean, you couldn't come out with really any better news than they did last quarter. The market did respond in kind, though, ahead of the split, and did come back, so it continued to rally. So we'll see what happens along those lines.
Joel, it's still higher though than when they announced the split, and obviously the second quarter was an awful lot better than the first quarter. But the expectations, I think, for the current quarter, are quite significantly. They've been marked down quite significantly. I've written a note on this, which you can actually get off our website. It's basically, is the bar too high? Set too high for Apple and Microsoft as they trade near multi-year highs. I mean, if you drill down and you look at what Samsung announced earlier this month, it expected to see its third consecutive decline in quarterly profit this year. It's really struggling to compete with the cheaper devices in the Chinese market, is Samsung. Now, obviously, Apple's just signed that deal with China Mobile. Are its profit margins going to come under pressure in the same way that Samsung's are?
Yeah, no, that's a good point. Yeah, going to you got the Microsoft earnings today as well. So it's what an unprecedented move for Microsoft last week. You had the Morgan Stanley analyst coming out on Wednesday and saying he's looking for a good quarter. Thursday they announced that they're slashing 18,000 jobs. Which I guess is good for the company unless you're one of the 18,000 people that lost their job. And, it got way overdone in the pre-market trading, reached that level, and then we've pulled back here. What's your opinion on Microsoft at this elevated level?
Well, again, I mean, it's been 6 months now since Satya Nadella got his feet under the desk. So I think, if anything, it's probably an early school report on Mr. Nadella's vision to take the company away from, its position as sort of software giant and its old legacy markets, and then turn it into the mobile and cloud computing space. Now, in the second quarter, it's sort of focusing on not only its gaming and its Xbox, but also on Office 365. And it's collaborating now with Apple, which for me was actually quite a big step for it to do, because it's never really been big on alliances. And the fact that it put those versions of Word, Excel and PowerPoint on iTunes suggests that it really is geared up to really implement a new cloud-based computing model. Now, it's got Windows 8, a free cloud storage device with free 15 gig for everyone. Office 365 accounts for over 60% of its operating profit. So I think he's done very well in putting the apps onto the App Store at Apple, because anything that can make its Office 365 business software much more sticky has got to be a good thing. I think it's one of those things that it really needs to focus on. Obviously, the Nokia story, it's a sad fact of capitalism, unfortunately. When you lose jobs, that's a good thing because it basically lowers the cost base. But I'd also be looking at how the decision to end support for Windows XP has helped its take-up of Windows 8.1 desktops. Have they lost market share to Apple and the Mac as well? So certainly it's a broad-based strategy. There's 2 or 3 components to that. There's obviously the Xbox. They cut prices on that to compete with PlayStation, the PS4. You've got the cloud strategy, trying to compete with Apple on the App Store. But also you've got the Office and the business products as well. Because I think Apple teamed up with IBM, didn't they, with respect to enterprise and what have you, to try and make business apps, which is basically, I think, where Microsoft are historically strong. Now, people have suggested that could be a game changer for Apple. I'm not convinced, because my experience of IBM was Lotus Notes, and Lotus Notes to me is a bit of a dog.
Do you think that they serve Nadella, they were sandbagging him and served a little bit of a layup there, that they had these layoffs and all this stuff in the works before he stepped in and, just give him a boost, in the office, that they decided to roll it out now? Or do you think this is something that, emanated from his leadership?
Obviously there was talk about Ballmer going in November last year, so I certainly think this is a business repositioning that's been in the works quite some time. Certainly in the past 3 to 4 days, Microsoft has enjoyed some fairly good gains, and certainly if you look at it since the beginning of this year, the stock's up 21%. My question is an awful lot of the good news already priced into that? Because when we were trading in December, we were around about $37 a share. We're now around about 45. So I think he's really got to come in and blow expectations away to really sustain the gains that we've seen so far this year.
Okay, do you follow the gold and crude markets?
I do follow the gold markets, and certainly those CPI figures really haven't changed the dial with respect to gold. I'm still of the opinion that gold still remains fairly well supported, anywhere near 1280. 1,280. I mean, we're pretty much in a range. I think the downside is fairly limited, and I know there's an awful lot of speculation at the moment that gold could go as low as $1,000 or $700 an ounce. I really think that's unlikely. And the reason I think that's unlikely is because the break-even price for mining gold is around about $1,100 an ounce. As soon as it gets anywhere near that, the gold miners will just stop digging it out of the ground. And that will essentially keep a floor under the price. As for oil prices, again, they've been pretty dull for quite some time now. Are you talking Brent or WTI, Joel? Do you want my view on Brent or WTI?
I am talking about the Brent.
The Brent.
Yeah.
The Brent, again, we've been in a range of 103, 113 for about the past 9 months. You could argue that obviously geopolitical concerns are going to underpin it. I really don't see too much downside, much below $100. I think, unless we get a significant deterioration in geopolitics, particularly in Russia or in Iraq, I think the upside remains fairly contained, simply because I think the outlook for global growth remains worryingly weak.
Okay, and just in our final minute here, you just overall take on the S&P 500 futures bumping up here against all-time high multiple times. We've done this. Is this today we finally break through?
I think there's a good chance. I think the market wants to test that 2,000 level. I am a little bit I'm cautious to be overly long at these sorts of levels, Joel. If I look at all of the broad markets, I look at the US small cap. Given what Mrs. Yellen said last week about stretched valuations, I think you've got to be worried about the S&P 500 anywhere near 2,000. The reason for that is I'm not convinced, as probably everyone else is, that the US economy is as strong as people think that it is. You look at those Q1 GDP numbers that we saw, minus 2.9. Now, next week we get Q2 GDP. I will be very surprised if we wipe out that entire 1 month's loss or contraction. I think if anything, we may come in at 2.8. At a pinch, we might come in at 2.9. But when I hear people saying, we're going to get 3%, 3.5%, I'm thinking to myself, with an economy that's 70% services and healthcare spending driven, what's going to drive that growth?
Excellent.
Yes, the manufacturing numbers are good.
Yep.
The non-farm payrolls have been fairly good. But if you look at retail sales, they're worryingly weak.
Okay, excellent point. We've had Michael Hewson on, Chief Market Analyst at CMC Markets, focusing on the foreign currency markets, as well as giving us a great view of the U.S. markets. Michael, thanks for coming on today. We hope to have you on again soon.
Thank you, Joe.
Okay.